North American markets nosediving today with the threat of new tariffs on Europe and concerns about the sovereignty of Greenland. Let's go forward with this thought. Michael Zinn is joining us, Managing Director, Senior Portfolio Manager, UBS. Michael, thanks for your time.
Good to be with you, Marilla.
How concerned are you about the Greenland storyline continuing to play out on the markets?
This seems like it's going to be a year of policy uncertainty, and that's just another example of it. It's a midterm election here in the United States. I would say that certainly wasn't necessarily on our bingo card a week or two ago. I think what's driving markets maybe a little more profoundly today is what's going on in Japan, where we are seeing yields surge a little bit. And that, I think, is a little bit more of a concern because rising bond yields in Japan have been tugging on global yields for a while now. And, days like today where they kind of push the top end of the ranges and push U.S. rates to the top ends of their ranges, those begin to discourage investors from taking risk and encourage them to go into other things like gold. So, as we reach the end of today's trading day and we see not really much respite in what's happening with U.S. 10-year yields, Japan 10-year yields, you're seeing, stock markets kind of hit their lows near of the day. You're seeing gold near its high of the day. That probably means investors might be advised to be a little bit patient, see how this works out. We think this is all landing in a fundamentally pretty strong backdrop, so I don't think this is, going to haunt us for the rest of the year by any means. But, these kinds of yield-spawned sell-offs can be sharp declines, and you want to just be mindful of patience sometimes being rewarded.
Okay. You see more of a bull run in 2026. I'm wondering, what are the sectors you see getting ahead this year?
Yeah. It's a change in the music, I think, from the previous couple of years. Of course, in the past, tech has been leading the charge, and the Mag 7, of course, have been on the top of everyone's favorite playlist. And this year does feel a little different. First of all, rest of world is doing perfectly fine as it did last year. Tech is lagging this year. We're seeing energy do very, very well. Materials do well. Small cap do well. Housing do relatively well. So, other sectors, the kind of also magnificent 493 are coming to the fore. So we're having basically a lot of fun looking in other sectors a little bit away from tech. And things like materials and energy are areas that we're looking at a lot.
Okay. Let's talk about the midterm year. You mentioned that November, of course, you have the midterms. What usually plays out in a year like this one? Is it more volatility?
Yeah, there's more volatility in the 4-year cycle. It's typically the least rewarding year on average. That's kind of seasonality analysis, which is certainly no guarantee. But we're seeing, with the affordability push here in the U.S., there are a lot of cross currents. We're obviously seeing, notes about credit card and the levels of rates that they can charge. Last week, the power producers were singled out, and they're talking now about having a different kind of auction, and the big data center hyperscalers needing to underwrite their own construction, potentially, of power plants to power their stuff. And so, I think there are some potential, policy, more populist haymakers that can be disrupting markets. Typically, that's a lot of short-term volatility and often leads to good buying opportunities, but you want to be a little bit patient. And then on the other side of things, you're having a real affordability emphasis. And so there's an emphasis from the administration on keeping rates lower. And they have different levers they can pull in order to achieve that. They can do things with getting the government-sponsored entities to buy mortgage bonds. Obviously, they have some influence on who the next Fed chair is going to be and what their policies are. And so, days like today where you see yield surge are concerning. And at the same time, you also, maybe want to be on the lookout for government, some level of intervention where there's a response from the government in order to keep rates low, in order to keep affordability improving.
Can I just get you, before I have to let you go, on tech specifically, because we saw some steam come out of that at the end of last year. It hasn't really reinflated much. It's a little more volatile this year. What do you expect for tech this year? And I know you think that Asian tech might even do better than American tech.
Yeah, we are seeing a re-rating in a lot of the Asian tech companies. I think that's largely a function of the fact that there's a big emphasis now on memory, and a lot of those fabs are housed in Asia. You're seeing much more emphasis there. I think in terms of the big seven platform players, there is more of a clash of the Titans dynamic going on there, where they're going after each other's businesses more aggressively, and not just the Mag 7, but of course some of the big private players as well, all going after advertising business, e-commerce business. So this is a little bit of the survival of the fittest mode, and it's not clear, to what extent all of them will flourish. And so I think a lot of those names, not all, but many of those Mag 7 names will be a source of funds, because the market, of course, tends to follow performance. And we've seen those lag, and we're seeing the rest of the stuff do a little bit better. So when those earnings reports come up, I think the biggest distinguishing factor is going to be particularly the software companies that have cloud offerings and what that rate of cloud growth is. I think that's going to be an important thing to watch.
Michael Zinn, got to leave it there, sir. But thank you so much for your time.